We went to the court in UK. We got a judgment against that CEO for 142 billion naira, stolen from the bank, taken to buy shares and manipulate the shares of his own institution, and also transferred outside to purchase property. Having decided that there was need for action, we had to ponder the possible consequences of moving against management. These were people who were untouchable, they were extremely powerful, and there was a real risk that our action might precipitate a much more serious calamity.
15 bank officials have already been taken into custody, and another 2 are believed to be on the run.
In the early 2000s, the Nigerian banking sector introduced a rule that every bank must have at least 25 billion naira before they can operate. And because of this, a lot of banks actually folded up because they couldn't afford that 25 billion naira. But at that time, Intercontinental Bank saw it as an opportunity to grow, and it was headed by Mr. Erastus Akingbola. He decided to work really hard and grow massively during that time, and eventually became one of Nigeria's top banks by 2006. He started acquiring assets worth about $8 billion and opened branches all over the country, even in places like London and West Africa. But behind that success, there were massive cracks they were forming. You see, in order for those banks to actually achieve this threshold, they started taking very big risks. Now, what Intercontinental Bank started doing was that they started lending out huge amounts of money, especially to people and companies who wanted to buy stocks or invest in risky businesses like oil and gas. And these loans were given without enough scrutiny to make sure that the borrowers could pay back. But at that time as well, Intercontinental Bank was actually also investing heavily in the Nigerian Stock Exchange. They were buying shares in several companies in the Nigerian Stock Exchange, hoping that the value of these shares will increase over time, which is actually a very risky and a very dangerous game. Because if the Nigerian stock market crashes, it means that all their investments will fly away. But another problem was how the bank got their money. Instead of relying mostly on customer deposits borrowed from foreign investors through something called foreign portfolio investment, these investors would pour money into Nigerian stock market or banks, expecting quick profits, and this made the foundation shaky, even though nobody noticed at first. In 2008, the world was hit by a major stock market crash. In fact, top businesses and top banks in the US had to crash because they lost a lot of money, especially because of people who couldn't pay back from the loan they had been giving them throughout the world.
The stock market is now down 21%.
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
Nigerian banks, especially Intercontinental Bank, started to feel the heat. Foreign investors who had poured billions into Nigerian stock market and banks suddenly wanted their money back. Money was draining out of the Nigerian economy on a rapid scale, and the Nigerian stock market crashed, losing about 70% of its value. And Intercontinental Bank, who has invested millions and billions of naira into the Nigerian stock market, saw their investment go very worthless. And also at that time, several people who had taken loan from Intercontinental Bank as well, which was one of their strategies in order to get this 25 billion naira threshold, couldn't pay back because of the stock market crash. And these loans continued to pile up, which eventually made the bank to run out of money, and investors started complaining. But there were also some secrets that top executives at Intercontinental Bank at that time were also keeping from the public and the regulators. In fact, they discovered that they were using customer money to manipulate the stock market in their favor. They were accused of buying shares of the bank through shell companies, using the bank's money, artificially inflating the share price, which made the bank look more valuable than it actually is. Investors were shocked because ordinary Nigerians who had bought bank shares, believing in the bank's success, felt betrayed. In fact, the CBN accused the CEO of price manipulation, saying he used 87 billion naira of the bank's fund to prop up its share value. In fact, the CEO of Intercontinental Bank, Mr. Erastus Akingbola, was also accused of approving massive loans to companies that is personally linked to, especially companies including Profits Finance Limited, a company allegedly tied to Akingbola, the CEO, and his associates. The CBN discovered that the bank lent billions of naira to the firm and other businesses without collateral or repayment plans. these loans they approved for themselves was just not risky, but was actually unethical for themselves. The CEO of Intercontinental Bank and all the executives decided to bypass all the laws and ignored all the rules in order to get these loans approved for themselves. The CBN estimated that about 250 billion naira worth of loans were tied to insider trades by personal executives of Intercontinental Bank, which means that a huge chunk of the bank's money was funneled to people close to the leaders and CEOs. And when these companies couldn't repay, especially after the 2008 stock market crash, the bank was left with lots of holes in its finances. But the CBN discovered that these particular loans were not just about companies. They discovered that the top CEOs of Intercontinental Bank were also enriching themselves and giving themselves surplus bonuses from the bank, despite the fact that at that time the bank was losing billions of naira as a result of the stock market crash. It was reported that the CEO himself, Mr. Erastus Akingbola, actually owned properties and assets which was funded indirectly through the bank's resources, which shocked regulators who expected him to prioritize the bank's health during a very worrisome period. And because of these deals, it drained the bank resources and left less money to cover customer withdrawals or even pay staffs, and by 2009 the bank started running out of cash. Customers started panicking and people were lining up to withdraw their savings before it was too late. And by 2009, a new CBN governor was actually appointed, and this one was more stricter than the previous one. He started to approve an audit of all the banks in Nigeria, especially after the stock market crash. And that was when he discovered that this bank was actually in big trouble as a result of risky deals and huge loans that is on its neck. Eventually, the immediately appointed CBN governor removed the CEO of Intercontinental Bank as the head of the bank and also sacked 4 executives of the bank, appointing 4 new executives to manage the bank. By August 2009, the EFCC declared the CEO, Mr. Akingbola, wanted for his role in the bank's collapse. He was accused of fraud, money laundering, and stealing. He was alleged to have siphoned about 179 billion naira to manipulate the bank's shares and approve 150 billion in insider loans. The EFCC also investigated the transfer of about £1.3 million from the bank's London account to Fuga Solicitor for a property purchase linked to Mr. Akingbola, a lifeboat settlement trust, which they claim were proceeds of this particular laundry. Immediately was declared wanted by the Economic and Financial Crime Commission. He left Nigeria all of a sudden, and investors who had trusted him as a big star who was trying to reform the Nigerian banking sector, they realized that he was totally a fraud at the beginning. Eventually, the EFCC decided to issue an international arrest warrant. In order for Interpol to arrest him, immediately he cited in any airport anywhere across the world. In 2010, after numerous pressure from the EFCC and threat of extradition, he returned to Nigeria. The EFCC arrested him and charged him to the Federal High Court in Lagos on 86 counts of fraud and 15 counts of bribery. And when he was arrested and charged to court, he pleaded not guilty, and the judge over the case discharged his case. The EFCC and customers who were furious about this decision decided to petition the Nigerian Judicial Council over the judge's decision, and there was allegation that there has actually been a judicial interference in that particular decision. Eventually, after the investigation by the Nigerian Judicial Commission, the judge was compulsorily retired from that particular case and any case at all in Nigeria. The EFCC appealed the decision of the judge, and the Court of Appeal actually ordered for a fresh trial of the case from the beginning. By early 2011, it was clear that Intercontinental couldn't survive alone. The bank and the Nigerian financial sector decided that the best way to save the bank was through a merger or acquisition. And by March 2011, Access Bank started negotiations to acquire Intercontinental Bank. The plan was to take over Intercontinental Bank assets, branches, and customers by merging them with Access Bank's operation. This was not just a business deal, but a deliberate attempt to save millions of investors and depositors' funds in order to preserve their jobs. And Access Bank also saw it as an opportunity to grow. They decided to add about Intercontinental Bank 350 branches to their network to strengthen their position as one of the Nigerian top banks. And by 2011, the deal was completed. Access Bank acquired Intercontinental Bank for about $50 billion, one of the biggest mergers in the history of the Nigerian banking sector. Today, the trial is still facing a lot of judicial maneuvers and manipulation. Mr. Akingbola has been arraigned to court but has not been convicted. What do you think about this whole case? Do you think that this man is actually guilty And do you think that it wasn't working alone? Let me hear your thoughts in the comments below. So I'm done with this part.